Chim. Okay, so I'm recording from here. Somebody said please record some 5 minutes ago. Okay, so I'm recording from here, right? Now back to what I was saying. Now, if we let's complete this our slide. Let's complete our slide. And when we are done with our slide, we can now go and look for all these patterns. You know, we can now look for these patterns. All right, so this is what we have here, yeah? Double top, head and shoulder, rising wedge, right? You must wait for a break in market structure. And I'm going to explain what I mean by break. Because if you don't understand that break, you may fall for what is called a fake out instead of a breakout. A fake out instead of what? A breakout. Yeah? So back to what we're saying. Let's look at the other types of reversal patterns. We have looked at, there are so many more, but these are like, you know, the popular ones. We still have cup and handle, we have rounded bottom, and the rest of them, yeah? We're going to look at all of that. And all these things are in our Forex manual, the Forex textbook, right? We have a Forex manual that you can easily get. If you have that book, almost everything here and so much more is inside. Yeah, okay, so let's just go ahead and complete it. So this is the inverted version of the double top. That's the double bottom. So some people call it the M formation. That's the double top. Some people call it the M formation. While some other people call it the double bottom, the W formation, right? Because you see, this looks like the letter M. This looks like letter M. This looks like letter M. So that's why some people call it the M formation. And these guys, some people call it the W formation because it looks like letter W, right? Now, okay, so going forward, continuing what we are doing. Now let's look at the inverted head and shoulder. That's what I showed you in the Bitcoin chart some minutes ago. I showed you this in the Bitcoin chart some minutes ago, right? Then we now have also the falling wedge. Here, market is behaving as if you have Mami Water Spirit. It's coming down, yeah, but so market is coming down, and before you know, it starts forming some patterns. Similar highs. It's almost similar, but not really similar per se, right? So you want to be very careful. You want to be very, very careful when you get to times like this. You want to be careful when you get to this kind of time. Yeah? Okay, so basically, this is for reversal patterns. Now, we say we have reversal pattern, we have continuation pattern, and we have bilateral pattern. Now, when I tell you, before we move into continuation pattern, remember I said you must wait for the formation to be complete. That means you're waiting for a sell. That means you're waiting for what? You're waiting for a sell. You must wait for the formation to be complete. Now, what does this mean? What this means is that you must wait for a breakout. Look at this guy. This is an example of a head and shoulder. This is an example of my head and shoulder. This is the first head. This is the first shoulder. It comes down. It finds a support. Comes down, gets a higher. Of course, this is a higher low. It has printed a higher high. But now it has come back to form what? A similar low with this previous guy, which is now our neckline. Then it comes to the shoulder level now. Then comes here. Now, please pay attention. Very important. You see this candle? This is the heart of this trade, right? This is the heart. This is the heart of this trade, this candle. Why did I say it's the heart of the trade? What's going on? Just plenty. Now, why did I say this is the heart of this trade? Yeah, it's very simple. Now, if this candle does not, if this line is not broken through with a full candle, that means you must see the full candle, the complete candle. It's not the wick, it's not this small pin. If you notice a pin bar that goes through this and price goes back, it has not broken it. Oh. You must wait for the full candle to completely close and close below this line. Because if it doesn't close below, if you are saying, let's assume now that this market is dropping and you do not wait for this candle to close, 1 minute for this candle to close, it can come and close back above this line. And once it closes back above this line, we are heading up. It has formed another pattern completely. So you must wait for the close of this candle. Very important. So even though you are looking at your chart formation in line charts, you must come to confirm whether it has broken or not. You must come back to your candlestick chart to view it. Right? Okay, so let's get to the next one. So this is another example. But this is an example for double top. This is an example for double top. So price is rising, gets here, come down, comes here again, now forms a similar high. Remember I told you, a trend definition is what? Higher highs and higher lows, or lower highs and lower lows. But this time it has formed a high, but it's forming a lower high, now coming to form what is similar high. So it means that there's small something here. Now, but don't be in a haste to say, market don't turn. No. If it comes back to this point, don't still be in a haste. Ensure that this candle closes well below this line. Very important that you wait for the candle to close. It is very, very, very sacrosanct. Right? Now, once this candle closes, then you can confirm that, yes, this is actually a sell trade, or that this pattern has actually formed. Then you can go ahead and set your sell right around here and set your stop loss either here or somewhere. Just look for a convenient area to set your stop loss. You will be fine. Right? Okay, so I believe you understand all these things I'm saying here. Right? So let's now move to, for those of you that are just attending my class for the first time, right? If you followed all our classes before now, most of all these things are actually have been explained, right? They have actually been explained. But if you have been trading before now, you would also find some of all these things very useful. But if you intend to go into trading, all of this will help you as well to become a very profitable trader. Last week, we looked at just candlestick pattern, not chart patterns now, candlestick pattern. And with the candlestick patterns alone, we saw how only one candlestick today would have given you 100 pips. 100 pips means if you are using the smallest lot size, you will make at least 15,000. You would have made at least 16,000 naira today. With just one candlestick, what one candlestick showed you. Now imagine all the things that are happening today. Yeah? Somebody made $20 today in her first trade outing. $20 is about 38,000 naira now. It's not money that's somebody's salary. All this, in the aim of this training is not for me to keep giving you signal. The aim of this training is for you to know how to take trades yourself. Right? And we are going to talk about that. So let's just round up this. Continuation pattern. So continuation patterns are those patterns, that signal that the ongoing trend has not ended, though, that it will resume. What is just going for is a break, or we call it consolidation. So trends don't always move in a straight line, like I showed you that time, right? That you will not have trends. You will not have market going up like this. Wow, no. What you're going to have is something like this, come here, something like that. So you must understand when this down that is coming doesn't mean it's changing trend. When this is a continuation. So you must understand all of those. So trends don't always move in a straight line. They often deviate from a straight path, pausing, moving sideways, correcting, and then resuming momentum to continue in what the overall trend. Right? When we get to when we are talking about trends, we are going to understand that we have major trends, we have minor trends, right? We have major trends, we have intermediate trends, then we have minor trends. Major trends, intermediate trends, and minor trends. So most times, a lot of people follow minor trends. Now, what do I mean? The major trend may be that the market is bullish, or rather the market is rising. For those of you that are just joining us today that don't understand what the bullish word means. When we say that the market is bullish, we are actually saying that the market is rising. So when you see, you just open your chart, but because you are using a smaller time frame, maybe 5 minutes or 15 minutes, you can see that the market is selling. That's the market is falling. So you will just quickly jump into conclusion that, let me just take a sell now, not knowing that the major trend is a buy. So this is what all of these things mean. The trend will not always move in a straight line. Sometimes it will deviate, it will pause, it will move sideways, it will correct, then it will resume the overall trend. So you need to understand when a pattern appears that shows you this market has not reversed. It's just correcting. You understand? We are not there yet. So continuation patterns are also referred to as what? Consolidation patterns. Why? Because they show how buyers and sellers take a quick break before moving further in the same direction as the prior trend. Yeah? Okay, so left off, continue and look at some patterns that are continuation patterns. We have about 3 of those patterns. We have about 3 continuation patterns. We have the falling wedge, we have the bullish rectangle, and we have the bullish pennant. There are still more, but these are the most obvious. Now, this rectangle is one bad guy that you will always see very regularly, right? Now, market is rising. Please take notes so you understand. Remember, I told you that market would, if it's going up, this is what is forming, right? It's printing higher highs and higher lows when we are in an uptrend. So when the market is rising, then it starts printing what? Lower highs, but it's printing it in a channel. Don't be in a haste to think that, this thing don't go. Now, how would you notice something like this? Most times, how you notice something like this is that you notice that the first candle, the first bullish candle is still there. And all the small candles that are doing all this funny thing has not gotten to the bottom of this candle. Right? So you just notice that it's not going up, but it's not falling down so much. So what is printing is what is called a falling wedge. Price is here, then it's printing a falling wedge. Don't be in a haste to say market have changed like that Coach Silas said that once you have lower highs and lower lows, market have changed trend. Look at this thing well though. Look at this thing well. So once it starts printing this, there is a tendency that we are going to have a breakout at the top here. So that's why you see all this entry, stop, target, and all of those. This is to guide you to take when taking the trade. This is your guide when taking the trade, yeah? So when you notice a falling wedge, what are you going to do? Once you've drawn your line, you are going to set a buy stop. Oh, I'm becoming too technical. But for those of you that have been here, you understand what a buy stop is. You're going to set an entry here so that if the market breaks it, and how do we say markets will break it, breakout? We want to see what a full body candle, a full candle, not the wick of the candle, not the shadow of the candle. A full candle is what we want to see. So you want to make sure that a full body candle has broken through these points. Then you can set your entry and set your stop loss below, because it can still come back inside. But anything that makes it go below this place, know that there's a high tendency that the market has faked you. Remember that trading is not is a game of probability. But all these things I am showing you increases your chances. Right? Like I usually give an example. Somebody can just wake up one morning and say, rain go fall today, and decide to carry umbrella. And rain may actually fall, because the probability of rain falling is either 0 or 1. Either rain will fall or not. So there is no, the person must not be worshiping Ogugu or worshiping Amadioha to be able to tell you that rain will fall or not. However, if somebody decides, or you're watching the news in the night and you see weather forecast that it will rain by 3:30 in Asokoro, and you know that by 2 o'clock you have a meeting around Asokoro, it only makes sense that you carry umbrella if you're not driving. Why? Because you have seen from a forecast. How did these guys forecast it? They have all the machines and the rest of them. Now, it doesn't still mean that rain will fall, though. That rain may fall by 3:30. That rain may fall earlier than 3:30. Or that rain may fall later than 3:30. But why did you decide to carry umbrella? Because you had expert analysis tell you that rain will fall. It's different from when somebody just randomly tells you rain will fall. Especially if it's in a rainy season. If somebody tells you rain will fall in a rainy season, it doesn't have to be working with meteorology or any of all those guys. It's the same way people make money in cryptocurrency when the market is bullish. When we are in a bull market, almost everything you buy will go up. That does not make you a professional. In a bullish market, anything you buy will go up. This one is going up, buy. This one will go up, buy. They have released this coin, buy. People were buying shit and buying rubbish. Why? Because it's a bullish market. Everything was just rising. But it's for you to now, as a good trader, before you buy, even though the market is bullish, there are still certain things you will have to check. Okay, look for instance now. I think in the last 1 month, sorry, I'm deviating to crypto. All of these are still tradable assets. In the last 1 or 2 months, Davido have listed his coin. This will be like his third coin. Brain Jota listed his coin. Sabinus listed his coin. And first, you know that these people first, apart from being influencers, they have any form of knowledge about cryptocurrency, because we have not seen it apart from buying and selling. So they don't have anything it takes to create a coin and sustain the community. So you that know something about crypto, when you see them start listing their coin, you are not going to be moved. But newbies that have been bad, this one they buy, this one they do. Davido don't list coin, you run and buy. And you don't know that this is not his first coin, it's not his second coin. There is one coin he listed, he choke. All the people that bought it, he choke all of them. So what am I trying to say? Studying these patterns will help you make better informed decisions. So you are not doing kalo. You are not doing gamble. I had one comedian that came to learn trading. And while we were still teaching him, he just put money, just bought one coin. And I was still trying to ask him, Oga, who told you to buy? He said, we go up. And how do you know it will go up? He said, will it not go up? I said, no, up it goes. Queen Premier, let all of us be doing it, go up, I go. Will I not go up? He lost the money. He lost $300. He lost $300. You don't just do this thing, gamble. Learn this thing. It will help you. So continuation patterns. Yeah. So these are the kind of continuation patterns we have. Falling wedge, bullish rectangle, bullish pennant. Now, this rectangle is a consolidation pattern. That means the price has been rising for quite a while. Yeah. Price has been rising for quite a while. Now, all of a sudden, it looks as if he wants to print a double top. But instead of printing a double top, it comes down. Then it behaves as if you want to form a triple top. But instead of printing a triple top, so market starts ranging between this area. So it will just be going up and down, up and down, up and down, up and down. Then until it now finally what? Break out. So long as it is still trading in the same range, it's still trading within the same support and resistance area, there's a high tendency that it's going to break out in the upward. So long as it's still trading within, it's giving you similar highs, similar low, we are expecting a breakout in the upward direction, right? Now, the same thing with this guy. Now, this one is going to form what is called a flag. Now, what is a flag? Or a pennant, right? Now, this is becoming longer than I thought. Okay, so a pennant now is that the market is rising, then all of a sudden, it's now printing. Please take note. You will notice the difference between a falling wedge and a pennant. The market is printing lower highs, but higher lows. So it's printing lower highs and higher lows. This one is printing similar highs and what? Similar lows. This one is printing what? Lower highs and lower lows. That's the difference. Right? So it's as if this one is narrowing in. This one is narrowing, but both of them are facing downward. But this one, both of them are just facing here, over. So once you see all these patterns in your chart, you can simply tell that no, this market is not reversing. The market will continue going in the direction it's heading. Similarly, when you have a rising wedge, market is coming down, then it will form something like this. So that's the idea of this rising wedge, right? The same way you have also what? A bearish rectangle. Same way you have what? A bearish pennant. So basically, this is it. Okay, so let's look at an example in the chart. Now look at this. So the market is bullish, right? The market is rising. Then all of a sudden it comes here. It has formed a higher high here. So what we are expecting is a higher low. So it comes here, forms a higher low. So beautiful. But now we are expecting what? Another higher high to confirm trend. To confirm that we are still the same trend. But this time it now forms a lower high. So now, pay attention. This is where it gets critical. Now, from here, it can simply come here and form head and shoulder. That's why you must wait for the candle to close. It can come here and form head and shoulder. This is the head. This is the head. This is the shoulder. This is the neckline. So you must wait. If this candle comes here and breaks below this, now we have formed what? A head and shoulder. But if it doesn't break, so that it now forms a higher low. So remember, it has printed lower high. Now it has printed higher low. You know that what we are having here is a pennant. And we are expecting market to break in the upside. Right? That's it. Now, there's another pattern that I did not really talk about. And the reason I did not talk about this pattern is because you most likely find it in stocks. However, let me just show you. It's called the cup and handle. In the training material and my training text, all these are there. Right? In my training text, all these are there. So we have the cup and handle. So the market is rising. And all of a sudden, instead of correcting like this. It now corrects like this. So instead of correcting with a sharp bottom, it corrects with a rounded bottom. So that's what is called the cup and handle, right? Is one of those reversal, is one of those continuation patterns. When you see all these things, what do you do? What do you do? You know that the market is continuing in the same direction. Yeah? Okay, so finally, the bilateral pattern. Bilateral pattern means that you must wait. You don't know where the market is going to. You don't know whether it will go up or whether it will come down. Wait. Because it can break into any side. So once you see bilateral pattern, it's a sign of indecision. And usually one of the major forms of bilateral pattern is a triangle formation. Right? The price could break in either direction of the triangle. Right? This is a symmetrical triangle. Now, when we say symmetrical, that means it's almost as if the upside and the downside are almost the same. It's like a symmetry. Like if you draw a line in the center, it will give you, if you draw a line in the center of this triangle, it will divide the triangle into the equal halves. That's what we mean by symmetrical. Right? If you draw a line in the center, it will divide this triangle into what? Equal halves. That's a symmetrical triangle. When you see this triangle form, my brother, my sister, wait until the triangle completely closes. Right? Then the next one we have is what? Then they use on the drum. Ascending triangle. The difference between ascending triangle and ascending wedge is that the top is a support. Please take note, the top is a resistance, sorry. This line is straight, it's not rising to anywhere. This line is straight. Sorry. No straight. Then, so this is exactly what it is. It can break this side or break this side. Similarly, with our descending triangle. Anytime you notice any of these triangle patterns, the market is about to change, to move in any direction. You must wait for a breakout, right? Okay, so this is where we are going to stop for tonight when it concerns chart patterns. There are still some other patterns that are not in the video, but you'll find them in our manual, right? In our Forex trading manual. So for those of you that have got them, you'll find all of those things there, right? Okay, so I'm going to take the next 1 or 2 minutes to give, okay, I would have shown us 1 or 2 of these, but for want of time, okay, let me see if I can find 1 or 2. 1 or 2. Okay, let me show you rectangle pattern. Let's get back to our candles. Look at this. This is a clear rectangle pattern. Price has been rising. Right? Price has been rising. Then all of a sudden, the price has been rising. All of a sudden. What's going on? Okay, so price has been rising. Yeah. So price has been rising, yeah, forming different things. Then it comes in here. And what is it doing? It's forming similar highs, similar lows. It's just playing inside here. This is a continuation pattern. And notice when I tell you full body breakouts, when I tell you for a candle to break any support area, you see this full green candle. That's how it breaks out. If you see an extension of this, you see the candle used to break it. Full green candle. You must wait for a full body candle before you say there is a breakout. If not, all this pin, it will just take you to your village straight. Right? So you have an assignment. The things you have watched, go and identify them on your chart. When you find them on your chart, feel free to reach out to me. I'll tell you if you are correct or yes. Yeah? So that way we can learn more. Okay, so for those of you that just got testing today, okay, let me give a chance for questions. Let me give chance for questions. Okay, so I'll end this meeting now, so I'll close my class. Then the next session is question time, right? So thank you very much. Let's end this class now. We're coming for questions immediately. Reconnect for questions.